Hi everyone, Larry Bailey here with Mortgage Workflow Partners, bringing you another weekly market newsletter. Today is November 26, 2024. We're going to talk about what happened last week, the week of November 18th, 2024 in review. This information is brought to you from Mortgage Workflow Partners and the Mastering Encompass series. Gang, if you use Encompass and you're like every other independent mortgage banker, bank, credit union, servicer, those kinds of things, and you're leveraging the Encompass platform, reach out to us at Mortgage Workflow Partners. Guaranteed, when we do a workflow review for you and show you how you should be using your Encompass platform, you will gain efficiencies. Head over to mortgageworkflowpartners.com, or you can check us out over at masterencompass.com for more information there. Here's what happened. We had closings on existing homes rebounded in October, and we saw a pullback in new construction last month. Home builders are still feeling more positive about the future. Here's what we're going to talk about today. We have existing home sales beating expectations. We have new home builders feeling optimistic about the future. We've got new construction easing in October. That story is followed by continuing claims for jobless topping 1.9 million. This is a big deal. You want to listen for that story. We've got the latest LEI suggesting that there are, quote, challenges ahead in the economy. We've got a family hack of the week we'll talk about. Of course, what do you think it's going to be? It's probably something to do with Thanksgiving. And then we'll talk about what to look for this week. So let's get into this first story. We've got existing home sales beating estimates, and this information is coming straight to you from the National Association of Realtors, where existing home sales, which reflect, remember, closings on existing homes, not new construction. So this is existing homes. They rebounded in October, up 3.4% from September and 2.9% from a year ago. This was the first annual increase in more than 3 years. Big deal. The rise in closings last month makes sense, as the data likely reflects people who were shopping for homes in August and September when rates had temporarily moved lower. I know it's hard to remember that far in the back when rates were lower. What's the bottom line with this story, gang? October's improvements in existing home sales may be a blip because of the subsequent rise in interest rates this fall that happened after that. And while inventory has also increased to 1.37 million units available for sale, which is up 0.7% month over month and up 19.1% year over year, it's important to note that many homes counted in the existing inventory are under contract and not truly available for purchase. So it's kind of a tease. In fact, there's only 954,000 active listings. Those are homes that are available for purchase that were available at the end of last month. So inventory is tighter than the reporting implies. Regarding demand, homes remained on the market for an average of 29 days in October, and while 19% of homes sold above that list price, showing that there is still bidding wars in about 1/5 of homes nationwide, so which is crazy. And of course, that's regional, right? Depends on where you are. Plus, competition is expected to rise when rates move lower, if they move lower. All in all, the pent-up demand for homes combined with ongoing tight supply continues to bode well for housing as an investment and continued home price appreciation over time. That is, if you haven't put all your money into crypto, right? So the next story is all about home builders feeling optimistic about the future. You've got the NAHB here. That's the National Association of Home Builder. The sentiment chart there, that rose for the third straight month, which is great. And that's per the National Association of Home Builders, who reported that their housing market index increased 3 points to 46 in November. Any score over 50 on this index, as a reminder, which runs from 0 to 100, signals that more builders view conditions as good than poor. So the bottom line in the story is, while confidence remains below 50 in contraction territory, there was an improvement in all three index components, which is, again, big deal. That's buyer traffic, current and future expectations. Plus, future sales expectations jumped to 7 points to 64, moving well above 50 into expansion territory. The NAHB's chair, Carl Harris, confirmed that, quote, builders anticipate an improved regulatory environment in 2025, close quote. I think that has something to do with the election. Not sure, but I think that's what they're talking about. Here we go. New construction eased in October. We've got new construction that is shown here on the graph. You can see it. And by the way, if you're listening to this on podcast, thank you very much. If you want to see what we're sharing on screen, if that's important to you, head over to our YouTube channel using Mastering Encompass, or head over to mortgage.community. Check it out there. So even though home builder sentiment has started rising, builders are pulling back from new construction last month, with housing starts falling 3.1% from September. Starts for single family homes, which make up the bulk of home building and are the most crucial due to buyer demand, those are down 7%. Let's not forget to look at building permits, which reflect future construction. They moved lower overall. The single family permits actually increased 0.5% higher. So building permits overall were down, but single family was up 0.5%. So the bottom line in this data and this story is while higher mortgage rates have slowed production in October, the impact of the hurricanes in the south also added to the weakness in construction activity last month because people got to head down there to fix houses. In broader terms, new home building is still not keeping up with demand. We know this. Housing starts are near 6 years lows. Crazy. The limited new supply on the market is relative to household growth should continue to support home prices. Meaning, in English, that home prices shouldn't crater because all of a sudden we get a whole bunch of new inventory coming on market. Yeah, I think we should still continue to see home prices. Maybe they don't blow through the ceiling, but they're not going to fall either. Again, regional information is really important to pay attention to. So if you're a real estate investor, know your market. That's rule number one. All right, here's the next story. Continuing jobless claims. I told you it was a big one. It tops 1.9 million. And this is the initial jobless claims hit their lowest level since April as the weekly report came out. 213,000 people filed for unemployment benefits for the first time. And this reflects a decline of 6,000 from the previous week. However, continuing claims, that's the story here. Totally different than the weekly. They surged by 36,000 to top 1.9 million for the first time in 3 years. Bottom line here is while new unemployment filings were at 7-month lows, the elevated number of continuing jobless claims shows it's taking longer to find jobs for people. And with many people only receiving benefits for 26 weeks, the fact that continuing claims are rising as people's benefits are expiring also suggests weakness and slowing pace of hiring. It's not good for a lot of folks out there looking for a job. I know recently I posted for an Encompass admin job. I'm not exaggerating. Inside of 2 hours, I had 12 resumes from really qualified people. People that would not have been out of a job, 5 years ago. So it's definitely challenging. Speaking of challenges, here's the next story. Latest LEI suggests challenges are ahead. The Conference Board released their latest leading economic index, that's the LEI, which takes a broad look at the economy and tracks where it's heading in the near term. October brought a 0.4% drop, which is followed by September's 0.3% decline. The biggest negative contributor last month was the weak manufacturing sector. Bottom line in the story is the LEI has trended negative in the recent years, with Justine Zabinska-Lamonica, senior manager for business cycle indicators, noting that, quote, apart from possible temporary impacts of the hurricanes, the U.S. LEI continue to suggest challenges to economic activity ahead, close quote. There you go. All right, gang, it's Thanksgiving week. I certainly hope you have as great of a time as you can with your friends, family, whatever it is that you're doing. Take a moment to reflect on things that have happened this year. And in that regard, sometimes food helps. Sometimes food makes it better. So if you're watching this, follow along here for the family hack of the week. This is a homemade cranberry sauce. I actually grew up not liking cranberry sauce too much because I didn't have anybody make it homemade. And then I've had it homemade. Wow, it's really good. So if you're interested in this recipe, head over to watch the video using on YouTube, Mastering Encompass, or Mortgage.community. Check it out. It's a great Thanksgiving Day staple. Check it out. Thank you for the Recipe Food Network. Here's what we're looking for this week. There's a cornucopia, Thanksgiving term, of reports ahead for Thanksgiving holiday. In the housing news, we'll see appreciation data on October's new home sales on Tuesday, pending home sales Wednesday. Tuesday also brings minutes from the Fed's latest meeting. On Wednesday, look for the second reading for the third quarter GDP. Remember, there's 3 readings with every quarterly GDP, gross domestic product. The latest jobless claims and the Fed's favored measure of inflation, you know it, it's our friend, PCE, also known as personal consumptions expenditures. That'll be coming out also on Wednesday. So you guys have a great Thanksgiving. My name is Larry Bailey. Mortgage Workflow Partners is always here to help you. And again, if you want to up your game with your Encompass platform, check out Mastering Encompass. You won't be sad you did. Thank you. Take care. Be well.